Great news for anyone that's on a visa. I've literally just come off a Teams meeting with my business development manager at Principality Building Society. So they're a mortgage lender and they've confirmed some recent criteria changes for anyone that's on a visa within the UK. So let's have a look at what they are. So for anyone on a visa who's a foreign national, they've got no loan to value restrictions, meaning they can go up to 95% loan to value, assuming you meet all this other lending criteria we're going to go through. As you can see here, they will accept all visas except a refugee visa, and applicants need to have a minimum of 2 years address history within the UK. But remember, you need to pass credit score to be able to qualify for this loan to value. The lending criteria states that the applicants must have at least 12 months remaining on the existing visa, and only one applicant needs to meet the visa policy to qualify for the mortgage. This is great news for anyone who has aspirations of getting onto the property ladder and is on a visa in the UK, because not all lenders within the market will actually give you a 95% mortgage loan if you're on a visa. A lot of lenders, if you're on a visa within the UK, require a minimum 25% deposit. That means a maximum of 75% loan to value. As we know today, 25% deposit, it's not as easy as that. It's difficult. The property values are higher, the rates are higher, savings becoming a bit more tougher. So it's great news for anyone who does have aspirations that they can potentially get onto the property ladder, assuming they meet this lending criteria. And there is further great news. The lender takes a common sense approach to their lending criteria. Also, this is lending criteria as of today, of the 3rd of April, 2024, and they can consider visa cases on exception. So let's have a look at what they can potentially consider as an exception. So here you can see they can consider if the applicant doesn't meet both UK address history or time remaining on the visa. If the applicants are employed in a medical professional or a highly skilled role, they'll consider up to 95% loan to value if you don't meet their normal lending criteria. For all other cases, they'll go up to a maximum of 75% loan to value. So this is really positive news if you're on a visa within the UK looking to get a mortgage and get onto the property ladder. At the higher loan to values, remember, the lenders will have a higher internal credit score for you to pass. Your credit score needs to be a lot better. So what I mean by better is ideally no late payments, no adverse credit, no CCJs, no defaults. You need a good clean credit. The higher the internal credit scoring applied to your application, to yourselves by the mortgage lender to see if you'll pass for that higher loan to value mortgage. The great news with Principality Building Society is they have a common sense approach. So if there are certain cases, for example, that fall outside their lending criteria for these type of visa mortgages, as you saw, they can potentially provide an exception. The way the exception would work is your mortgage broker would write an email to their business development contact at the mortgage lender, explaining your case, explaining the scenario, explaining the plausibility of why they should basically be giving you a mortgage. So basically, in essence, selling you to the lender and giving you all the merits to them to say, look, my client is worth the mortgage loan. Please do consider a mortgage application from them. Now, the business development contact will forward that email to an underwriter, probably have a phone call with them, and then come back to us to say, yep, we will accept this client for a mortgage application, or no, we won't accept this client for a mortgage application. Right, it's very important for mortgage brokers to stay up to date on their game and to keep in constant communication with mortgage lenders and have good relationships with the banks. Because when lenders change their criteria, it's the mortgage broker's job to ensure that they're up to date with the lending criteria. So what you could potentially borrow today may change tomorrow. You might have not been able to get a mortgage today, but if a lender changes their criteria, you can get a mortgage now. Things change very quickly in the mortgage industry. So you need to make sure that the broker you use is up to date and basically on it in terms of lending criteria.